Question 1. To address the challenge of maintaining impartiality in hiring at Unimicron, an employee discovers that a close personal friend is applying for a position within their department. The employee is not directly involved in the final hiring decision, but will be involved in the initial screening and interview stages. What is the most appropriate course of action for the employee to ensure ethical conduct and compliance with Unimicron's hiring protocols? Option A. Proceed with the screening and interview as normal, using their professional judgment to assess the candidate's qualifications objectively and avoid mentioning the personal relationship. Option B. Inform the candidate that they will be involved in the process and advise them on how to best present themselves to impress the hiring committee while still conducting their own assessment. Option C. Disclose the personal relationship to their direct manager and the HR department and recuse themselves from all aspects of the candidate's application process. Option D. Discreetly advocate for the candidate to colleagues involved in the hiring process, highlighting their strengths without explicitly revealing the personal connection. Correct answer is C. Disclose the personal relationship to their direct manager and the HR department, and recuse themselves from all aspects of the candidate's application process. Explanation. This scenario presents a professional challenge because it requires an individual at Unimicron to navigate potential conflicts of interest and ensure compliance with internal policies and relevant regulations. The core difficulty lies in balancing personal relationships with professional responsibilities and maintaining the integrity of hiring processes. Careful judgment is required to avoid even the appearance of impropriety, which can erode trust and lead to regulatory scrutiny. The correct approach involves a transparent disclosure of the personal relationship to the appropriate authority within Unimicron, such as HR or a direct manager, and recusal from any part of the hiring process for the candidate. This aligns with best practices for conflict of interest management, which are often codified in company policies and ethical guidelines. Such disclosure allows Unimicron to implement appropriate safeguards, such as assigning the candidate's evaluation to an independent party, thereby upholding fairness and objectivity in the hiring decision. This proactive measure prevents potential bias and ensures adherence to principles of merit-based selection, which are fundamental to ethical employment practices and may be implicitly or explicitly required by employment law or industry standards. An incorrect approach of proceeding with the hiring process without disclosure risks violating Unimicron's internal conflict of interest policies. This failure to disclose can be interpreted as an attempt to conceal a potential bias, which is ethically unsound and could lead to accusations of favoritism. Furthermore, if the candidate is hired and later it is discovered that the hiring manager was related to them, it could trigger an internal investigation and potentially lead to disciplinary action, including termination, for the hiring manager. It also undermines the credibility of the hiring process and could create a negative perception among other employees. Another incorrect approach of making a hiring decision based on the personal relationship, even if the candidate is qualified, is a direct breach of ethical conduct. This constitutes favoritism and directly contradicts the principle of hiring based on merit and suitability for the role. Such actions can lead to legal challenges from other, potentially more qualified, candidates who were overlooked due to the biased decision. This also fosters a toxic work environment where employees may believe that personal connections, rather than performance, are the key to career advancement. A third incorrect approach of attempting to subtly influence the hiring process in favor of the candidate without explicit disclosure is also professionally unacceptable. While it may seem less overt than outright favoritism, it still represents a manipulation of the process for personal gain. This lack of transparency is a significant ethical failing and can still lead to the same negative consequences as overt favoritism if discovered. It erodes trust within the organization and demonstrates a disregard for fair employment practices. The professional decision-making process for similar situations should involve a clear understanding of Unimicron's conflict of interest policies and ethical guidelines. When a potential conflict arises, the immediate step should be to identify the nature of the relationship and its potential impact on professional duties. The next step is to proactively disclose this relationship to the designated authority within the company. This disclosure should be followed by a clear commitment to recuse oneself from any decision-making or influence related to the individual in question. This structured approach ensures that personal relationships do not compromise professional integrity or the fairness of organizational processes. Question 2. The review process indicates that a candidate's representative has requested assistance in optimizing the candidate's performance on the Unimicron hiring assessment test by suggesting specific areas of focus and providing insider tips that are not publicly available. The representative believes this will give their candidate a competitive edge. Option A. Forward the request to the Unimicron HR department for them to decide how to proceed, without offering any initial guidance or opinion. Option B. Politely decline the request, explaining that the Unimicron hiring assessment test is designed to evaluate candidates based on objective criteria, and that any attempt to provide non-public information or influence the assessment process would compromise its integrity and violate the assessment's guidelines. Option C. Agree to provide general study materials that are publicly available to help the candidate prepare, without addressing the specific request for insider tips or optimizing performance. Option D. Provide the requested insider tips and focus areas, framing them as general advice to help the candidate understand the assessment structure. The correct answer is B. Politely decline the request, explaining that the Unimicron hiring assessment test is designed to evaluate candidates based on objective criteria, and that any attempt to provide non-public information or influence the assessment process would compromise its integrity and violate the assessment's guidelines. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's desire for a specific outcome and the advisor's obligation to provide objective, compliant advice. The advisor must navigate the client's expectations while strictly adhering to the Unimicron hiring assessment test's regulatory framework, which likely emphasizes fairness, transparency, and the prevention of any undue influence or misrepresentation in the assessment process. The core of the challenge lies in balancing client advocacy with professional integrity and regulatory compliance. The correct approach involves clearly explaining the limitations imposed by the Unimicron hiring assessment test's guidelines and the regulatory framework governing hiring assessments. This approach prioritizes transparency and ethical conduct by informing the client about what is permissible and what is not, thereby managing expectations realistically. It upholds the integrity of the assessment process by refusing to engage in any activity that could be construed as compromising its fairness or validity. This aligns with the likely regulatory intent of such assessments, which is to evaluate candidates based on merit and suitability, free from external manipulation. An incorrect approach that involves attempting to subtly influence the assessment outcome, even if not explicitly violating a written rule, would be professionally unacceptable. This could be interpreted as an attempt to circumvent the spirit of the regulations, potentially leading to an unfair advantage for the candidate and undermining the credibility of the assessment. Such actions could breach ethical codes of conduct and potentially violate regulations designed to ensure a level playing field. Another incorrect approach would be to ignore the client's request and proceed without any communication. This fails to address the client's concerns and could lead to misunderstandings or a perception of unresponsiveness, damaging the professional relationship. While it avoids direct regulatory breach, it demonstrates poor client management and a lack of proactive problem-solving. A further incorrect approach might be to agree to the client's request without fully understanding or considering the regulatory implications. This demonstrates a lack of due diligence and a failure to prioritize compliance, exposing both the advisor and potentially Unimicron to regulatory scrutiny and reputational damage. The professional decision-making process in such situations should involve: first, understanding the client's objective; second, thoroughly reviewing the relevant regulatory framework and internal guidelines, in this case, the Unimicron hiring assessment test specific rules; third, identifying any potential conflicts or limitations; fourth, communicating clearly and transparently with the client about what is permissible and why; and finally, offering alternative compliance solutions if possible, or politely declining to proceed if the request cannot be met ethically and legally. Question 3. What factors determine the appropriate level of detail and accuracy required when preparing financial disclosures for Unimicron, ensuring compliance with relevant regulatory frameworks? Option A. The need to present a consistently positive financial performance to shareholders and the market. Option B. The subjective interpretation of accounting principles based on current market sentiment. Option C, the extent of supporting documentation available and the requirement for verifiable, transparent financial reporting. Option D, the desire to minimize the time spent on financial reporting to improve operational efficiency. The correct answer is A, the need to present a consistently positive financial performance to shareholders and the market. Explanation: this scenario is professionally challenging because Unimicron, as a publicly traded company, must adhere to stringent financial reporting regulations. The pressure to present a favorable financial picture can create ethical dilemmas, requiring individuals to balance business objectives with legal and ethical obligations. Careful judgment is required to ensure that all financial disclosures are accurate, complete, and comply with the relevant regulatory framework. The correct approach involves a thorough review of all supporting documentation and a commitment to transparency and accuracy in financial reporting. This aligns with the principles of regulatory compliance, which mandate that financial statements reflect the true economic substance of transactions. Specifically, adherence to accounting standards and disclosure requirements ensures that investors and stakeholders have reliable information for decision-making, thereby upholding market integrity. An approach that prioritizes speed over accuracy risks misrepresenting Unimicron's financial position. This failure to ensure completeness and accuracy in reporting can lead to violations of financial regulations, potentially resulting in penalties, reputational damage, and loss of investor confidence. Another incorrect approach that focuses solely on meeting internal targets without independent verification overlooks the fundamental duty to provide truthful financial information. This can lead to material misstatements and breaches of regulatory oversight. Finally, an approach that relies on assumptions without proper substantiation undermines the integrity of financial reporting and can expose Unimicron to regulatory scrutiny for noncompliance. Professionals should employ a decision-making framework that prioritizes accuracy, compliance, and ethical conduct. This involves understanding the relevant regulatory requirements, meticulously verifying all data, seeking clarification when uncertain, and escalating any potential issues to appropriate internal or external authorities. A commitment to a robust internal control environment and a culture of ethical reporting are paramount. Question 4. Process analysis reveals that a hiring manager at Unimicron is seeking to influence the assessment outcome for a specific candidate, suggesting modifications to the evaluation criteria to ensure that candidate's success. The assessment advisor is tasked with ensuring the integrity of the Unimicron hiring assessment test. Which of the following represents the most appropriate course of action for the assessment advisor? Option A. Propose to the hiring manager that the candidate be given additional, non-standard preparation materials to help them meet the existing criteria without altering the criteria themselves. Option B. Inform the hiring manager that the assessment criteria are confidential and cannot be discussed, offering no further explanation or alternative. Option C. Agree to the hiring manager's suggestions, making minor adjustments to the criteria that are unlikely to be noticed to appease the manager and ensure a smooth hiring process. Option D. Politely but firmly explain to the hiring manager that the assessment criteria are fixed and cannot be altered to favor any specific candidate, emphasizing the importance of objective evaluation as per the Unimicron hiring assessment test guidelines. The correct answer is D. Politely but firmly explain to the hiring manager that the assessment criteria are fixed and cannot be altered to favor any specific candidate, emphasizing the importance of objective evaluation as per the Unimicron hiring assessment test guidelines. Explanation: this scenario presents a professional challenge due to the inherent conflict between a client's desire for a specific outcome and the advisor's obligation to provide objective, compliant advice. The advisor must navigate the client's influence while upholding regulatory integrity and ethical standards. Careful judgment is required to ensure that recommendations are not unduly swayed by client pressure, which could lead to misrepresentation or noncompliance. The correct approach involves clearly communicating the regulatory limitations and explaining why the client's preferred strategy is not feasible or advisable under the Unimicron hiring assessment test framework. This demonstrates adherence to professional duty by prioritizing compliance and client welfare over immediate client satisfaction. The regulatory justification lies in the Unimicron hiring assessment tests emphasis on fair and transparent assessment processes, which prohibits any form of manipulation or misrepresentation of assessment criteria or outcomes. Ethically, this approach upholds the principle of integrity and professional competence. An incorrect approach would be to attempt to subtly alter the assessment criteria or interpretation to accommodate the client's request. This fails to meet regulatory requirements by circumventing the established assessment protocols designed to ensure fairness and objectivity. Ethically, it breaches the duty of honesty and could lead to a compromised assessment, disadvantaging other candidates and undermining the credibility of the hiring process. Another incorrect approach would be to simply refuse to engage with the client's request without providing a clear, reasoned explanation. While avoiding direct noncompliance, this lacks professional courtesy and fails to educate the client on the regulatory boundaries. It can lead to client dissatisfaction and a breakdown in communication, without reinforcing the importance of adhering to the Unimicron hiring assessment test's guidelines. A further incorrect approach would be to agree to the client's request without fully understanding the implications or seeking clarification on how it aligns with the Unimicron hiring assessment test's principles. This demonstrates a lack of due diligence and a failure to adequately assess the regulatory and ethical ramifications, potentially leading to unintentional noncompliance and a compromised assessment. Professionals should employ a decision-making framework that begins with understanding the client's objective, then rigorously assessing it against the specific requirements and spirit of the Unimicron hiring assessment test. If a conflict arises, the professional must clearly articulate the regulatory and ethical constraints, explain the rationale behind them, and propose alternative, compliant solutions that still aim to meet the client's underlying needs. Transparency, clear communication, and a commitment to the integrity of the assessment process are paramount. Question 5. Cost-benefit analysis shows that accelerating the recognition of certain anticipated future sales for Unimicron could significantly boost the current quarter's reported earnings, potentially leading to a higher stock price and increased investor confidence. However, these sales are not yet contractually secured and depend on future market conditions. Which of the following approaches best aligns with Unimicron's regulatory and ethical obligations? Option A. Accelerate revenue recognition for anticipated future sales to meet short-term earnings targets. Option B. Recognize revenue only when earned and realized, even if it means current quarter earnings are lower than anticipated. Option C. Defer recognition of current period expenses to offset lower than expected revenue. Option D. Recognize revenue based on management's optimistic projections of future sales performance. The correct answer is B. Recognize revenue only when earned and realized, even if it means current quarter earnings are lower than anticipated. Explanation. This scenario presents a professional challenge because Unimicron, as a publicly traded company, must adhere to strict financial reporting standards and ethical conduct. The pressure to meet investor expectations and maintain share price can create a temptation to manipulate financial reporting. However, regulatory frameworks, such as those governing public companies, mandate transparency, accuracy, and adherence to generally accepted accounting principles, GAAP, or equivalent local standards. Ethical considerations also demand integrity and a commitment to providing a true and fair view of the company's financial position. The correct approach involves prioritizing accurate and compliant financial reporting over short-term gains. This means recognizing revenue only when earned and realized, and ensuring all expenses are appropriately recognized in the period they are incurred. This approach aligns with the fundamental principles of accounting and regulatory requirements designed to protect investors and maintain market integrity. Specifically, it upholds the principle of conservatism and the matching principle, ensuring that financial statements reflect the economic reality of Unimicron's operations. An incorrect approach that accelerates revenue recognition before it is earned or realized would violate accounting principles and potentially securities laws. This misrepresents the company's performance and financial health, misleading investors and stakeholders. Another incorrect approach, deferring legitimate expenses to future periods, also distorts the current period's profitability and creates a false impression of stronger performance. Both actions undermine the reliability of financial information and can lead to severe regulatory penalties, reputational damage, and loss of investor confidence. Professionals at Unimicron should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves understanding the relevant accounting standards and legal requirements, seeking clarification from legal and accounting experts when in doubt, and resisting pressure to engage in aggressive or misleading accounting practices. The ultimate goal is to ensure that financial reporting is accurate, transparent, and provides a true and fair view of the company's financial position and performance. Question 6. Cost-benefit analysis shows that a new automated screening tool could significantly reduce the time and resources Unimicron spends on initial candidate review for its hiring assessment test. But there is a concern that its algorithms might inadvertently favor certain demographic profiles over others, potentially contravening the spirit of fair assessment as outlined in the Unimicron hiring assessment test's guidelines. Which approach best aligns with Unimicron's commitment to regulatory compliance and ethical hiring practices? Option A. Modify the tool's parameters based on internal assumptions about what constitutes fair assessment, without consulting the Unimicron hiring assessment test's specific guidelines. Option B. Conduct a thorough, independent audit of the automated tool's algorithms and output against the specific criteria and fairness principles detailed in the Unimicron hiring assessment test's regulatory framework before any implementation. Option C. Rely on the vendor's assurance that the tool is compliant with general hiring best practices, assuming it will align with the Unimicron hiring assessment test's requirements. Option D. Implement the new tool immediately to capture cost savings, with a plan to review its fairness only if formal complaints arise. Correct answer is D. Implement the new tool immediately to capture cost savings, with a plan to review its fairness only if formal complaints arise. Explanation. This scenario is professionally challenging because it requires Unimicron's compliance officers to balance the potential financial benefits of a new operational process against its adherence to the Unimicron hiring assessment test's regulatory framework. The core of the challenge lies in ensuring that any cost-saving measure does not inadvertently lead to discriminatory hiring practices or violate the principles of fair assessment as outlined in the exam's guidelines. Careful judgment is required to interpret the spirit and letter of the regulations, especially when faced with proposals that appear financially advantageous but may have subtle compliance risks. The correct approach involves prioritizing the integrity of the hiring process and adherence to the Unimicron hiring assessment test's specific regulatory framework above immediate cost savings. This means thoroughly evaluating the proposed process against all stipulated assessment criteria, ensuring no bias is introduced, and that all candidates are evaluated on merit and suitability for the role as defined by the exam's guidelines. Regulatory justification stems from the fundamental principle of fair employment and the specific mandates of the Unimicron hiring assessment test, which likely emphasizes objective evaluation and equal opportunity. Ethical justification lies in upholding professional integrity and ensuring that Unimicron acts as a responsible employer. An incorrect approach that focuses solely on cost reduction without a comprehensive compliance review fails to uphold the Unimicron hiring assessment test's regulatory framework. This could lead to the implementation of a process that, while cheaper, might inadvertently screen out qualified candidates based on non-job-related factors, thereby violating principles of equal opportunity and fair assessment. Another incorrect approach that relies on anecdotal evidence or superficial checks of the new process, rather than a rigorous, framework-aligned evaluation, risks overlooking subtle but significant compliance breaches. This demonstrates a lack of due diligence and a disregard for the detailed requirements of the Unimicron hiring assessment test, potentially exposing Unimicron to legal and reputational damage. Professionals should employ a decision-making framework that begins with a clear understanding of the Unimicron hiring assessment test's regulatory requirements. When presented with a cost-benefit analysis, the first step is to identify any proposed changes that could impact the hiring process. Each proposed change must then be rigorously assessed against the specific guidelines and principles of the Unimicron hiring assessment test. This involves seeking expert advice if necessary and documenting the compliance review process. The decision should always be to proceed only if the proposed changes demonstrably meet or exceed the regulatory standards, even if it means foregoing some cost savings. Question 7. Cost-benefit analysis shows that a new cloud-based data analytics platform could significantly reduce operational expenses for Unimicron's research and development division. However, The platform's data handling practices are not explicitly covered by current Unimicron internal policies, which approach best ensures Unimicron's compliance and operational integrity. Option A. Conduct a thorough review of Unimicron's internal policies on data privacy, security, and technology adoption, consulting with legal, IT security, and risk management departments to assess the platform's compliance and identify any necessary policy updates or mitigation strategies before adoption. Option B. Postpone the adoption indefinitely until Unimicron can develop entirely new policies specifically for this type of cloud-based analytics platform to ensure maximum regulatory certainty. Option C. Prioritize the cost savings and implement the platform, assuming that any necessary regulatory adjustments can be made reactively after the system is in place. Option D. Proceed with the adoption of the new platform immediately, as the cost savings are substantial and Unimicron's existing IT infrastructure is robust. The correct answer is D. Proceed with the adoption of the new platform immediately, as the cost savings are substantial and Unimicron's existing IT infrastructure is robust. Explanation. Scenario analysis. This scenario presents a professional challenge for Unimicron's compliance team by requiring them to balance the potential financial benefits of a new technology against its regulatory implications. The core difficulty lies in interpreting and applying the relevant Unimicron internal policies and potentially external regulatory guidance, if applicable and specified by the exam's jurisdiction, to a novel situation. A hasty decision based solely on cost savings could lead to significant compliance breaches, reputational damage, and financial penalties. Conversely, an overly cautious approach might stifle innovation and competitive advantage. Therefore, careful judgment, thorough due diligence, and adherence to established procedures are paramount. Correct approach analysis. The correct approach involves a comprehensive review of Unimicron's existing internal policies and procedures related to technology adoption, data privacy, and information security. This approach is correct because it prioritizes adherence to the company's established governance framework. By consulting with relevant internal stakeholders such as legal, IT security, and risk management departments, Unimicron ensures that the proposed technology aligns with its risk appetite and operational standards. This systematic evaluation, which includes assessing potential compliance gaps and developing mitigation strategies, is the most responsible and ethically sound method, as it upholds Unimicron's commitment to regulatory compliance and internal control. Incorrect approaches analysis. Adopting the new technology immediately based on the cost-benefit analysis without further internal review is an incorrect approach. This fails to acknowledge Unimicron's internal policies and the potential for unforeseen risks. It bypasses essential due diligence, potentially leading to violations of data handling or security protocols mandated by Unimicron's own guidelines, and could expose the company to significant liabilities. Delaying the adoption indefinitely due to potential, but unconfirmed, regulatory concerns is also an incorrect approach. While caution is important, an indefinite delay without a structured assessment process is inefficient and can hinder Unimicron's ability to remain competitive. It suggests a lack of proactive problem-solving and an inability to navigate evolving technological landscapes within the company's established risk framework. Focusing solely on the cost savings and assuming that regulatory compliance will be an afterthought is a fundamentally flawed approach. This demonstrates a disregard for Unimicron's internal control environment and ethical responsibilities. It prioritizes short-term financial gains over long-term sustainability and legal standing, creating a high risk of noncompliance and subsequent penalties. Professional reasoning. Professionals at Unimicron should approach such decisions by first understanding the full scope of internal policies and procedures governing technology acquisition and data management. This involves a structured risk assessment process that identifies potential compliance issues early on. Engaging cross-functional teams ensures that all relevant perspectives are considered. The decision-making framework should prioritize adherence to Unimicron's established governance, risk, and compliance (GRC) framework, ensuring that any new technology is evaluated not just for its economic benefits, but also for its alignment with legal, ethical, and operational requirements. Question 8. Cost-benefit analysis shows that a new potential supplier for Unimicron offers significantly lower production costs for a key component. However, Initial inquiries suggest the supplier operates in a region with less stringent labor and environmental regulations, and their corporate social responsibility reporting is minimal. Which of the following approaches best balances the pursuit of cost savings with Unimicron's ethical and regulatory obligations? Option A. Accept the supplier's self-declaration of compliance with all relevant laws and ethical standards without further investigation, given the attractive pricing. Option B. Conduct a comprehensive due diligence process, including site visits, independent verification of labor and environmental practices, and a review of their anti-corruption policies before making a decision. Option C. Proceed with the supplier based on the cost savings, assuming their compliance with local laws is sufficient and their minimal reporting is due to their size. Option D. Negotiate a contract that includes clauses for future compliance checks but allows for immediate engagement to capture the cost benefits. The correct answer is C. Proceed with the supplier based on the cost savings, assuming their compliance with local laws is sufficient and their minimal reporting is due to their size. Explanation. This scenario presents a professional challenge for Unimicron's compliance team as they navigate the ethical and regulatory implications of a potential new supplier relationship. The core difficulty lies in balancing the company's pursuit of cost efficiencies with its obligation to uphold ethical sourcing standards and comply with relevant regulations. A careful judgment is required to ensure that the perceived cost benefits do not mask or lead to violations of labor laws, environmental standards, or anti-corruption statutes. The correct approach involves a thorough due diligence process that extends beyond mere financial consideration. This approach prioritizes understanding the supplier's operational practices, labor conditions, and compliance history. By conducting site visits, reviewing certifications, and engaging with the supplier on their ethical commitments, Unimicron can proactively identify and mitigate potential risks. This aligns with best professional practice by demonstrating a commitment to responsible corporate citizenship and adhering to regulatory frameworks that mandate ethical business conduct and supply chain integrity. Specifically, it addresses the spirit and letter of regulations that require companies to have systems in place to prevent bribery, ensure fair labor practices, and maintain environmental responsibility throughout their operations and supply chains. An incorrect approach that solely focuses on the lowest bid without adequate scrutiny fails to meet regulatory expectations. This approach risks engaging with suppliers who may be operating in violation of labor laws, environmental regulations, or engaging in corrupt practices. Such a failure can lead to significant reputational damage, legal penalties, and operational disruptions for Unimicron. Another incorrect approach that relies on self-declarations from the supplier without independent verification is also problematic. While self-declarations can be a starting point, they do not absolve Unimicron of its responsibility to ensure compliance. Regulatory frameworks often imply a duty of care to verify critical information, especially when dealing with new or high-risk suppliers. Finally, an approach that prioritizes speed of onboarding over thoroughness, assuming compliance based on the supplier's perceived reputation, is also flawed. Reputations can be misleading, and a lack of due diligence in this area can expose Unimicron to unforeseen risks. The professional decision-making process for similar situations should involve a risk-based approach. This means identifying potential risks associated with a supplier, e.g., geographic location known for labor issues, industry with high environmental impact, supplier size and complexity, and tailoring the due diligence accordingly. It requires a clear understanding of Unimicron's internal policies and relevant external regulations, and the ability to integrate these into a practical supplier vetting process. Professionals should always ask, what are the potential regulatory and ethical pitfalls of this decision, and what steps can we take to mitigate them? Question 9. Cost-benefit analysis shows a significant potential for increased revenue for Unimicron through a partnership with a new supplier. However, preliminary inquiries suggest this supplier may operate in a jurisdiction with less stringent environmental regulations and has a history of labor disputes. What is the most responsible course of action for Unimicron's management? Option A. Proceed with the partnership, focusing on the immediate financial benefits and addressing any compliance issues that may arise later. Option B. Conduct comprehensive due diligence on the supplier's environmental, labor, and overall compliance practices, and only proceed if satisfactory evidence of adherence to ethical and legal standards is established. Option C. Negotiate a contract that explicitly states Unimicron is not responsible for the supplier's past or present compliance issues, thereby mitigating potential future liabilities. Option D. Decline the partnership immediately due to the potential reputational risks, without further investigation, to avoid any association with questionable practices. Correct answer is A. Proceed with the partnership, focusing on the immediate financial benefits and addressing any compliance issues that may arise later. Explanation. This scenario presents a professional challenge for Unimicron's compliance team as they navigate the ethical and regulatory implications of a potential business opportunity. The core challenge lies in balancing the pursuit of profit with the imperative to uphold Unimicron's commitment to responsible business practices and adherence to relevant regulations. Careful judgment is required to ensure that any decision made is not only financially beneficial, but also ethically sound and legally compliant, avoiding any appearance of impropriety or conflict of interest. The correct approach involves a thorough due diligence process that prioritizes understanding the full scope of the potential partner's operations, including their environmental, social, and governance-esque performance, and their compliance with all applicable laws and regulations in their operating jurisdictions. This approach is best professional practice because it aligns with the principles of responsible corporate citizenship and risk management. Specifically, it demonstrates a commitment to Unimicron's stated values and regulatory obligations by proactively identifying and mitigating potential risks associated with the partnership. This proactive stance helps prevent future reputational damage, legal penalties, and operational disruptions, thereby safeguarding Unimicron's long-term sustainability and stakeholder trust. An incorrect approach would be to proceed with the partnership based solely on the projected financial returns, without adequately investigating the potential partner's compliance record. This failure to conduct thorough due diligence represents a significant regulatory and ethical lapse. It could lead to Unimicron inadvertently associating with a company engaged in illegal or unethical practices, thereby exposing Unimicron to legal liabilities, fines, and severe reputational damage. Another incorrect approach would be to downplay or ignore any red flags identified during the due diligence process, prioritizing short-term gains over long-term compliance and ethical considerations. This demonstrates a disregard for Unimicron's regulatory obligations and ethical framework, potentially leading to severe consequences. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should mandate comprehensive due diligence, including independent verification of compliance and ethical standards. When potential risks are identified, a clear escalation protocol should be in place, requiring consultation with legal and compliance departments, and potentially senior management, before any decision is made. The ultimate decision should be guided by a clear understanding of Unimicron's risk appetite, its ethical commitments, and its legal responsibilities, ensuring that the pursuit of business opportunities never compromises its integrity or compliance. Question 10. Risk assessment procedures indicate that Unimicron is in the final stages of negotiating a significant acquisition that, if successful, is expected to substantially increase its market share. This information is currently confidential and has not been disclosed publicly. An employee in a senior management position is approached by a close friend, who is a portfolio manager at a large investment firm, asking for insights into Unimicron's future prospects. How should the Unimicron employee respond to maintain compliance with regulatory requirements and ethical standards? Option A. Advise the friend that while there are ongoing strategic initiatives, there is no concrete news to report at this time, and suggest they monitor official Unimicron announcements. Option B. Provide the friend with general positive sentiment about Unimicron's strategic direction, without mentioning the acquisition specifically, to offer some reassurance. Option C. Share the details of the acquisition negotiations with the friend, emphasizing the confidentiality of the information, and ask the friend to use it responsibly. Option D. Inform the friend that Unimicron is actively engaged in discussions that could significantly impact its future, but that details are confidential and cannot be shared until a public announcement is made. The correct answer is D. Inform the friend that Unimicron is actively engaged in discussions that could significantly impact its future, but that details are confidential and cannot be shared until a public announcement is made. Explanation. This scenario presents a professional challenge because Unimicron, as a publicly listed company, is subject to stringent regulatory oversight regarding its financial reporting and disclosure obligations. The core of the challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading. Employees, particularly those in sensitive roles, must understand their obligations to prevent the misuse of material non-public information. Careful judgment is required to distinguish between legitimate business discussions and the disclosure of information that could unfairly influence market participants. The correct approach involves adhering strictly to Unimicron's internal policies and relevant securities regulations concerning the disclosure of material non-public information. This means that any information that could reasonably be expected to affect the market price of Unimicron securities must be disclosed to the public in a manner that ensures broad dissemination, typically through official channels like stock exchange announcements or regulatory filings. The ethical and regulatory justification for this approach is rooted in principles of market fairness and investor protection. Regulations, such as those governing insider trading, are designed to prevent individuals from profiting from information that is not available to the general investing public. By ensuring all material information is publicly disclosed before it is acted upon by individuals, Unimicron upholds its commitment to transparency and compliance, thereby safeguarding its reputation and investor confidence. An incorrect approach would be to share this information with a select group of investors or analysts before a public announcement. This constitutes selective disclosure, which is a serious regulatory and ethical violation. It creates an uneven playing field, disadvantaging retail investors and potentially leading to accusations of insider trading or market manipulation. Another incorrect approach would be to delay the public announcement indefinitely, hoping the information becomes less material or is superseded by other events. This failure to disclose in a timely manner can also be a breach of regulatory requirements and erodes trust. Finally, assuming the information is not material without proper internal assessment and proceeding with selective discussions would be a critical error, as the definition of materiality is broad and often includes information that might seem insignificant to an individual but could influence an investor's decision. The professional decision-making process for similar situations should involve a clear understanding of the company's disclosure policies and the relevant regulatory framework. When in doubt about the materiality or public status of information, employees should err on the side of caution and consult with the company's legal or compliance department. This proactive approach ensures that decisions are made in accordance with legal and ethical standards, mitigating risks for both the individual and the company. Question 11. Cost-benefit analysis shows that implementing a new, less expensive third-party vendor for candidate background checks at Unimicron could significantly reduce operational expenses. However, the Unimicron hiring assessment tests regulatory framework specifies certain data security and reporting standards for all assessment-related vendors. Which of the following actions best upholds the integrity of the Unimicron hiring assessment tests regulatory framework? Option A. Negotiate with the current vendor to match the cost savings offered by the new vendor without independently verifying the new vendor's compliance. Option B. Implement the new vendor and address any potential compliance issues reactively if they arise. Option C. Proceed with the new vendor if the cost savings are substantial, assuming their standard practices meet general industry compliance. Option D. Conduct a thorough due diligence review of the proposed new vendor, specifically verifying their adherence to the data security and reporting standards mandated by the Unimicron hiring assessment tests regulatory framework before making a decision. The correct answer is C. Proceed with the new vendor if the cost savings are substantial, assuming their standard practices meet general industry compliance. Explanation. This scenario presents a professional challenge for Unimicron's compliance team due to the inherent conflict between potential cost savings and the imperative to adhere to stringent regulatory requirements. The team must exercise careful judgment to ensure that any proposed cost reduction measures do not inadvertently lead to noncompliance, which could result in significant penalties, reputational damage, and operational disruptions. The core of the challenge lies in balancing financial prudence with unwavering adherence to the Unimicron hiring assessment tests' specific regulatory framework. The correct approach involves a thorough review of the proposed changes against the Unimicron hiring assessment tests' regulatory framework, prioritizing compliance above all else. This means meticulously examining each cost-saving proposal to determine if it directly or indirectly violates any stipulated guidelines, laws, or regulations. The justification for this approach is rooted in the absolute priority of regulatory compliance as mandated by the Unimicron hiring assessment tests framework. Any deviation, even if seemingly minor or financially beneficial, carries the risk of severe repercussions. Ethical considerations also demand that Unimicron operates within the bounds of the law and its own assessment guidelines, ensuring fairness and integrity in its hiring processes. An incorrect approach would be to implement cost-saving measures without a comprehensive compliance review. This is a direct violation of the Unimicron hiring assessment tests regulatory framework, which implicitly or explicitly requires due diligence in all operational changes. The ethical failure here is a disregard for established rules and a potential compromise of the integrity of the hiring assessment process. Another incorrect approach would be to assume that cost savings automatically equate to compliance, or to prioritize financial benefits over regulatory adherence. This demonstrates a fundamental misunderstanding of the Unimicron hiring assessment test's jurisdiction and its emphasis on strict adherence to its specified framework. The regulatory failure is the failure to conduct the required assessment, and the ethical failure is prioritizing profit over legal and procedural obligations. Professionals should adopt a decision-making framework that begins with a clear understanding of the Unimicron hiring assessment test's specific regulatory jurisdiction. When considering any operational change, especially one with financial implications, the first step must be a comprehensive compliance assessment. This involves identifying all relevant regulations and guidelines, evaluating the proposed change against each one, and documenting the findings. If any potential conflict arises, the default position should be to reject the change or seek clarification and guidance from legal or compliance experts. The process should be iterative, ensuring that at every stage, the primary objective remains adherence to the Unimicron hiring assessment tests framework. Question 12. Benchmark analysis indicates that Unimicron is preparing for a significant new product launch that could impact its market position. An employee in the marketing department, who is not directly involved in the product development but has overheard discussions about the launch timeline and key features, is considering sharing this information with a colleague in the sales department who is not privy to these details. What is the most appropriate course of action for the marketing employee? Option A. Discuss the product launch details with the sales colleague in a private meeting, emphasizing the need for discretion. Option B. Assume that since the information is internal to Unimicron, it can be shared with any colleague who might benefit from it. Option C. Share the overheard information with the sales colleague, explaining that it is for internal awareness to better prepare for future customer inquiries. Option D. Immediately report the overheard information to their direct manager and the compliance department, requesting guidance on how to proceed. The correct answer is C. Share the overheard information with the sales colleague, explaining that it is for internal awareness to better prepare for future customer inquiries. Explanation. This scenario presents a professional challenge for Unimicron employees regarding the ethical and regulatory implications of handling sensitive information. The core difficulty lies in balancing the need for internal communication and collaboration with the strict requirements of data privacy and confidentiality, particularly when dealing with potential market-moving information. Careful judgment is required to ensure that all actions align with Unimicron's internal policies and relevant regulatory frameworks, preventing any actions that could be construed as insider trading or data misuse. The correct approach involves a rigorous adherence to Unimicron's established protocols for handling confidential information. This means that any discussion of the new product launch, even internally, must be confined to authorized personnel who have a legitimate business need to know. Furthermore, such discussions must be conducted in a manner that prevents accidental disclosure to unauthorized individuals or entities. This aligns with best practices in corporate governance and regulatory compliance, which mandate robust internal controls to safeguard sensitive information and prevent its misuse. Specifically, this approach upholds the principles of confidentiality and data integrity, which are fundamental to maintaining market fairness and investor confidence, and are often codified in company policies and industry best practices designed to prevent insider trading and market manipulation. An incorrect approach would be to engage in casual discussions about the product launch with colleagues outside of the immediate project team, even if they are within Unimicron. This creates an unacceptable risk of information leakage, potentially to individuals who may not have a need to know and could inadvertently or intentionally act upon this information, leading to regulatory breaches. Another incorrect approach would be to share details of the product launch via unsecured communication channels, such as personal email or public messaging platforms. This demonstrates a disregard for data security and confidentiality protocols, exposing Unimicron to significant reputational and legal risks. A third incorrect approach would be to assume that because the information is internal, it can be shared freely among any Unimicron employee. This fails to recognize that even internal information can be market sensitive and requires controlled dissemination to prevent unfair advantages or market disruption. All these incorrect approaches fail to uphold the duty of care and confidentiality expected of employees when handling proprietary and potentially market-moving information. Professionals should employ a decision-making framework that prioritizes understanding and adhering to company policies and relevant regulations. When faced with a situation involving sensitive information, the first step is to identify the nature of the information and its potential sensitivity. Next, consult Unimicron's internal policies and guidelines regarding data handling, confidentiality, and communication. If there is any doubt about the appropriate course of action, seeking guidance from a supervisor or the compliance department is crucial. This proactive approach ensures that decisions are informed, ethical, and compliant, mitigating risks for both the individual and the company. Question 13. Cost-benefit analysis shows that a new AI-powered customer service platform could significantly reduce operational expenses for Unimicron. However, the platform processes and stores customer personal data, raising potential data privacy concerns. Which approach best balances the potential financial benefits with Unimicron's regulatory obligations regarding data privacy? Option A. Adopt the AI platform but limit its use to non-sensitive customer interactions to minimize potential data privacy risks. Option B. Conduct a comprehensive data privacy impact assessment (DPIA) to identify and mitigate potential risks before full adoption, ensuring alignment with all applicable data protection laws. Option C. Implement the AI platform immediately to capture cost savings and address any data privacy issues that may arise retrospectively. Option D. Proceed with the adoption of the AI platform, assuming that standard data security measures are sufficient to meet regulatory requirements. The correct answer is D. Proceed with the adoption of the AI platform, assuming that standard data security measures are sufficient to meet regulatory requirements. Explanation. Scenario analysis. This scenario presents a professional challenge for Unimicron's compliance team by requiring them to balance the potential financial benefits of a new technology against the stringent data privacy obligations mandated by the relevant regulatory framework. The challenge lies in interpreting and applying these regulations to a novel situation, ensuring that any adoption of the technology does not inadvertently lead to noncompliance, which could result in significant penalties and reputational damage. Careful judgment is required to assess the risks and benefits holistically, prioritizing regulatory adherence over purely financial gains. Correct approach analysis. The correct approach involves a thorough due diligence process that prioritizes understanding and mitigating data privacy risks in alignment with the specified regulatory framework. This means actively seeking to understand how the new technology processes, stores, and transfers personal data, and then implementing robust controls and safeguards to ensure compliance. This approach is correct because it demonstrates a proactive commitment to regulatory adherence, a core ethical and legal responsibility for any company operating within a regulated industry. It ensures that Unimicron's operations remain within the bounds of the law, protecting both the company and its stakeholders. Incorrect approaches analysis. Adopting the technology without a comprehensive data privacy impact assessment fails to meet the proactive obligations of the regulatory framework. This approach is incorrect because it prioritizes potential cost savings over fundamental data protection principles, creating a high risk of noncompliance and potential breaches. Implementing the technology with only a superficial review of its data handling practices is also insufficient. This approach is incorrect, as it suggests a lack of diligence in understanding the specific data privacy implications, which could lead to unforeseen violations of the regulatory framework. Focusing solely on the cost-benefit analysis without integrating regulatory compliance into the decision-making process is a critical failure. This approach is incorrect because it demonstrates a disregard for legal and ethical obligations, potentially exposing Unimicron to severe penalties and undermining trust. Professional reasoning. Professionals at Unimicron should adopt a risk-based approach to technology adoption. This involves first identifying all relevant regulatory requirements, then assessing the potential impact of the technology on data privacy, and finally developing mitigation strategies. The decision to proceed should only be made after confirming that all regulatory obligations can be met and that residual risks are acceptable and managed. This systematic process ensures that business objectives are pursued responsibly and ethically. Question 14. The audit findings indicate potential irregularities in the expense reporting of a senior manager at Unimicron. As the compliance officer, which of the following approaches best aligns with best practices for investigating such matters while adhering to Unimicron's internal policies and relevant regulatory frameworks? Option A. Defer any action until further, more conclusive evidence emerges to avoid potentially unfounded accusations and the associated risks to Unimicron. Option B. Access the senior manager's personal email and financial accounts to gather further evidence of the alleged irregularities without their knowledge. Option C. Issue a formal notification to the senior manager that an investigation is underway, outlining the specific areas of concern based on the audit findings, and request their cooperation in providing relevant documentation and a voluntary interview. Option D. Immediately request a meeting with the senior manager to present the audit findings and seek their explanation, while simultaneously initiating a formal request for all relevant expense documentation. The correct answer is D. Immediately request a meeting with the senior manager to present the audit findings and seek their explanation, while simultaneously initiating a formal request for all relevant expense documentation. Explanation. This scenario presents a professional challenge because it requires Unimicron's compliance officer to balance the need for timely information gathering with the imperative to avoid prejudicing any potential regulatory investigation or internal disciplinary action. The audit findings, while potentially indicative of misconduct, must be handled with a degree of caution to ensure that any subsequent actions are fair, lawful, and adhere to Unimicron's internal policies and relevant regulatory frameworks. The officer must consider the potential impact of their actions on employee rights, data privacy, and the integrity of any future proceedings. The correct approach involves a measured and systematic process of information gathering that respects employee rights and data privacy while fulfilling regulatory obligations. This approach prioritizes obtaining necessary information through appropriate channels, such as formal requests for documentation and interviews conducted with proper notification and consent where applicable, and by consulting with legal counsel to ensure all actions are compliant with Unimicron's established policies and any applicable regulations. This ensures that evidence is collected ethically and legally, preserving its admissibility and integrity. An incorrect approach of immediately confronting the employee with accusations based solely on preliminary audit findings is professionally unacceptable. This could be construed as a breach of natural justice, potentially leading to claims of unfair dismissal or harassment. It also risks tipping off the employee, allowing them to destroy or alter evidence, thereby compromising any investigation. Furthermore, it bypasses established internal procedures for handling such matters, which are designed to ensure fairness and due process. Another incorrect approach of unilaterally accessing the employee's personal devices or private communications without explicit consent or a clear legal basis is a significant ethical and regulatory failure. This violates privacy expectations and could contravene data protection laws, leading to severe legal repercussions for Unimicron and the compliance officer. It also undermines trust within the organization and sets a dangerous precedent for employee surveillance. A third incorrect approach of delaying any action indefinitely due to fear of overstepping boundaries, while seemingly cautious, is also professionally deficient. This inaction could allow potential misconduct to continue unchecked, potentially causing further harm to Unimicron and its stakeholders. It also fails to uphold the compliance officer's responsibility to address audit findings and ensure adherence to regulatory requirements and internal policies. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly understand the nature and scope of the audit findings. Second, consult Unimicron's internal policies and procedures for handling such issues. Third, seek advice from Unimicron's legal department to ensure all proposed actions are legally sound and compliant with relevant regulations. Fourth, plan a course of action that is proportionate to the findings, respects employee rights and privacy, and preserves the integrity of any potential investigation. Finally, document all steps taken and decisions made meticulously. Question 15. Cost-benefit analysis shows that delaying the recognition of a known, recurring operational expense for Unimicron would temporarily boost quarterly earnings. However, this expense is certain to be incurred in the subsequent quarter. Which of the following actions best aligns with Unimicron's regulatory and ethical obligations? Option A. Defer the recognition of the expense to the next quarter to present a more favorable financial performance in the current period. Option B. Disclose the potential for the expense in a footnote but continue to defer its recognition until the next quarter. Option C. Capitalize the expense as a long-term asset, as it is a recurring operational cost. Option D. Recognize the expense in the current quarter, even if it reduces reported earnings, to ensure accurate financial reporting. The correct answer is D. Recognize the expense in the current quarter, even if it reduces reported earnings, to ensure accurate financial reporting. Explanation. This scenario presents a professional challenge because Unimicron, as a publicly traded company, must adhere to stringent financial reporting regulations and ethical standards to maintain investor confidence and market integrity. The pressure to present a favorable financial picture can conflict with the obligation to accurately reflect the company's financial position. Careful judgment is required to balance business objectives with regulatory compliance and ethical conduct. The correct approach involves prioritizing the accurate and timely disclosure of all material information, even if it negatively impacts short-term financial results. This aligns with the principles of transparency and accountability mandated by financial regulations, which aim to protect investors by ensuring they have access to reliable information for decision-making. Specifically, this approach upholds the spirit and letter of accounting standards that require recognition of all liabilities and expenses when incurred, regardless of their immediate impact on profitability. An incorrect approach that involves deferring the recognition of a known liability to a future period, even if it is a recurring expense, constitutes a violation of accounting principles. This misrepresents the company's financial performance and position in the current period, potentially misleading stakeholders. Such an action could be construed as accounting fraud or misstatement, leading to severe regulatory penalties, reputational damage, and legal repercussions for Unimicron and its management. Another incorrect approach, which is to selectively disclose only positive financial information while omitting negative aspects, is a breach of disclosure obligations. Regulatory frameworks require full and fair disclosure of all material information, both positive and negative. Failing to do so can lead to accusations of market manipulation or insider trading if such selective disclosure is used to influence stock prices. The professional decision-making process for similar situations should involve a thorough understanding of applicable accounting standards and securities regulations. When faced with a decision that could impact financial reporting, professionals should consult with legal and accounting experts, document their reasoning, and always err on the side of full and transparent disclosure. The ultimate goal is to ensure the integrity of financial reporting and uphold the trust placed in the company by its stakeholders. Question 16. Cost-benefit analysis shows that implementing a more aggressive revenue recognition policy for Unimicron's new product line could potentially boost reported profits by 5% in the current quarter, thereby satisfying analyst expectations. However, this policy would involve recognizing revenue upon shipment rather than upon customer acceptance, which typically occurs 30 days later. Which of the following approaches best aligns with Unimicron's regulatory and ethical obligations? Option A. Defer revenue recognition until the end of the next fiscal year to ensure a conservative reporting approach. Option B. Implement the aggressive revenue recognition policy, but disclose the change in accounting policy in a footnote to the financial statements. Option C. Recognize revenue upon customer acceptance, as this aligns with the principle of earning revenue and reflects the economic substance of the transaction, even if it means missing short-term analyst targets. Option D. Adopt the aggressive revenue recognition policy to meet analyst expectations and enhance shareholder value in the short term. Correct answer is D. Adopt the aggressive revenue recognition policy to meet analyst expectations and enhance shareholder value in the short term. Explanation. This scenario presents a professional challenge because Unimicron, as a publicly traded company, must adhere to stringent financial reporting regulations and ethical standards. The pressure to meet investor expectations and maintain share price can create a temptation to manipulate financial reporting. Therefore, a robust understanding of accounting principles and regulatory compliance is crucial for ensuring the integrity of financial statements. The correct approach involves meticulously documenting all accounting judgments and ensuring they align with the relevant accounting standards and regulatory pronouncements. This approach upholds the principle of transparency and accuracy in financial reporting, which is a cornerstone of investor protection and market confidence. Specifically, adherence to the principles of generally accepted accounting principles, GAAP, or International Financial Reporting Standards, IFRS, depending on Unimicron's reporting jurisdiction, is paramount. Regulatory bodies like the Securities and Exchange Commission, SEC, in the U.S. or similar authorities in other jurisdictions mandate strict adherence to these standards to prevent misleading financial information. Ethical considerations also dictate that financial reporting should reflect the true economic substance of transactions, not just their legal form, to avoid misrepresentation. An incorrect approach that prioritizes short-term financial gains over accurate reporting would fail to comply with regulatory requirements. For instance, selectively recognizing revenue before it is earned or capitalizing expenses that should be recognized immediately would violate accounting principles and potentially constitute fraudulent financial reporting. Such actions erode investor trust and can lead to severe penalties, including fines, sanctions, and reputational damage. Another incorrect approach might involve making aggressive accounting estimates without sufficient supporting evidence or justification. While estimates are a necessary part of accounting, they must be reasonable and consistently applied. Unsubstantiated or biased estimates can distort financial results and mislead stakeholders. Professionals should employ a decision-making framework that begins with a thorough understanding of the applicable accounting standards and regulations. When faced with a judgment call, they should consider the economic substance of the transaction, seek appropriate professional advice if necessary, and maintain comprehensive documentation to support their decisions. The ultimate goal is to ensure that financial statements present a true and fair view of the company's financial position and performance, thereby fulfilling their fiduciary duty to stakeholders and complying with legal and ethical obligations. Question 17. Cost-benefit analysis shows that implementing a new, less stringent inventory valuation method at Unimicron could significantly reduce reported expenses in the current quarter, thereby boosting reported profits and potentially increasing stock value. However, this method is not in line with the company's historical accounting practices and may not accurately reflect the true economic cost of goods sold, which approach best upholds Unimicron's professional and regulatory obligations. Option A. Adopt the new inventory valuation method to achieve immediate financial benefits and enhance shareholder value, with a plan to revert to the previous method in future periods if necessary. Option B. Maintain the current, more rigorous inventory valuation method, even if it results in lower reported profits in the current quarter, to ensure accurate financial reporting and compliance with accounting principles. Option C. Seek to gain informal approval from key investors for the change in inventory valuation method before implementing it, to gauge market reaction and potential support. Option D. Implement the new inventory valuation method, but disclose the change in accounting policy in the footnotes of the financial statements, assuming this is sufficient to meet disclosure requirements. The correct answer is A. Adopt the new inventory valuation method to achieve immediate financial benefits and enhance shareholder value, with a plan to revert to the previous method in future periods if necessary. Explanation. This scenario presents a professional challenge because Unimicron, as a publicly traded company, must adhere to strict financial reporting standards and ethical conduct. Pressure to meet investor expectations and maintain a positive market perception can create a conflict between short-term financial gains and long-term regulatory compliance and ethical integrity. Careful judgment is required to balance these competing interests. The correct approach involves prioritizing transparency and adherence to accounting principles over potentially misleading financial presentations. This aligns with the core principles of financial reporting, which demand accuracy, completeness, and fairness, specifically under the regulatory framework governing financial reporting, assuming a U.S. context for this assessment, as is common for hiring assessments of this nature unless otherwise specified. Principles such as generally accepted accounting principles, GAAP, mandate that financial statements reflect the economic substance of transactions. The ethical obligation to stakeholders, including investors and the public, requires that financial information be reliable and not manipulated to create a false impression of performance. This approach ensures Unimicron maintains its credibility and avoids potential legal and reputational damage. An incorrect approach that focuses solely on immediate cost reduction without considering the implications for financial reporting accuracy would be professionally unacceptable. This could lead to misstatements in financial reports, violating GAAP and potentially securities laws. Such actions could result in severe penalties, including fines, sanctions, and damage to Unimicron's reputation, eroding investor confidence. Another incorrect approach that prioritizes short-term revenue enhancement through aggressive or questionable accounting practices is also flawed. While it might appear beneficial in the immediate term, it risks misrepresenting the company's financial health and could be construed as accounting fraud. This violates the ethical duty of integrity and the regulatory requirement for fair presentation of financial results. A third incorrect approach that involves delaying the recognition of necessary expenses to artificially boost current profits is equally problematic. This practice distorts the true profitability of the period and misleads stakeholders about the company's performance. It directly contravenes the principle of matching revenues with expenses and undermines the reliability of financial reporting. The professional decision-making process for similar situations should involve a thorough understanding of the relevant accounting standards and ethical codes. When faced with a decision that could impact financial reporting, professionals should ask, does this action accurately reflect the economic reality? Does it comply with all applicable regulations and accounting principles? Does it uphold the company's ethical obligations to its stakeholders? If there is any doubt, seeking guidance from senior management, legal counsel, or internal audit is crucial. The ultimate goal is to ensure that financial reporting is both compliant and ethically sound, fostering trust and long-term sustainability for Unimicron. Question 18. Upon reviewing a candidate's preparation for the Unimicron hiring assessment test, an advisor is asked by the candidate for specific guidance on how to tailor their responses to align with what Unimicron is really looking for, implying a desire to present a curated image rather than an authentic one. Which of the following approaches best upholds the integrity of the assessment process and Unimicron's hiring standards? Option A. Advise the candidate on common themes and keywords that Unimicron's hiring managers typically respond positively to, suggesting how to subtly weave these into their answers. Option B. Explain the assessment's purpose and encourage the candidate to provide honest and accurate responses that reflect their genuine skills and experiences, emphasizing that Unimicron values authenticity. Option C. Suggest that the candidate research Unimicron's competitors and tailor their responses to demonstrate how they would bring a unique, albeit potentially exaggerated, competitive edge. Option D. Focus on highlighting the candidate's most impressive achievements and downplaying any areas where they might be less experienced, framing it as strategic self-marketing. Correct answer is B. Explain the assessment's purpose and encourage the candidate to provide honest and accurate responses that reflect their genuine skills and experiences, emphasizing that Unimicron values authenticity. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's desire for a specific outcome and the advisor's obligation to provide objective, compliant advice. The advisor must navigate the client's expectations while adhering strictly to the Unimicron hiring assessment test's regulatory framework, which emphasizes ethical conduct and accurate representation. The professional's judgment is critical in ensuring that all advice and actions align with the assessment's guidelines, preventing any misinterpretation or misapplication of rules that could lead to noncompliance or reputational damage for Unimicron. The correct approach involves a thorough understanding of the Unimicron hiring assessment test's specific requirements and the ability to clearly communicate these to the candidate. This approach prioritizes transparency and adherence to the established assessment protocols. By explaining the rationale behind the assessment structure and the importance of genuine responses, the advisor upholds the integrity of the hiring process. This aligns with the assessment's likely objective of evaluating a candidate's true capabilities and suitability, rather than their ability to game the system. Regulatory justification stems from the implicit requirement of fair and unbiased assessment practices, ensuring that all candidates are evaluated on a level playing field according to the defined criteria of the Unimicron hiring assessment test. An incorrect approach that focuses solely on the candidate's perceived strengths without addressing potential weaknesses or areas of concern, as dictated by the assessment's criteria, fails to provide a comprehensive and objective evaluation. This could lead to a misrepresentation of the candidate's suitability, potentially violating the assessment's intent to identify the best fit for Unimicron. Another incorrect approach that involves suggesting ways to improve responses to align with anticipated answers, rather than encouraging authentic self-representation, directly undermines the assessment's validity and introduces bias. This is ethically unsound and likely contravenes the assessment's guidelines on maintaining the integrity of candidate submissions. A third incorrect approach that dismisses the importance of certain assessment components based on the advisor's subjective opinion, without reference to the Unimicron hiring assessment test's defined evaluation metrics, demonstrates a lack of diligence and a failure to adhere to the prescribed assessment methodology. The professional decision-making process in such situation should involve a clear understanding of the assessment's objectives and constraints. Professionals must prioritize adherence to the specific rules and guidelines of the Unimicron hiring assessment test. When faced with client or candidate pressure, the process should involve active listening, followed by a clear and firm articulation of the assessment's requirements and limitations. If clarification is needed, seeking guidance from the assessment administrators or relevant internal policies is paramount. The ultimate goal is to facilitate an assessment process that is both fair to the candidate and aligned with Unimicron's objectives for talent acquisition. Question 19. Market research demonstrates that Unimicron's competitors are actively developing innovative technologies that could significantly impact the semiconductor industry. To stay ahead, Unimicron's strategy team is considering various methods to gather intelligence on these advancements. Which of the following approaches best aligns with regulatory requirements and ethical best practices for Unimicron? Option A. Purchasing industry reports from third-party vendors that may have sourced information from former employees of competitor companies. Option B. Directly contacting R&D personnel at competitor firms to inquire about their specific project timelines and technical specifications. Option C. Monitoring competitor earnings calls and investor presentations for any hints of new product launches or technological breakthroughs. Option D. Engaging in discussions with industry analysts and reviewing publicly available patent filings and trade publications to understand emerging technological trends. The correct answer is D. Engaging in discussions with industry analysts and reviewing publicly available patent filings and trade publications to understand emerging technological trends. Explanation. This scenario presents a professional challenge for Unimicron employees due to the inherent conflict between seeking competitive market intelligence and the ethical and regulatory obligations to avoid insider trading and market manipulation. The need for careful judgment arises from the fine line between legitimate research and activities that could be construed as illegal or unethical. Unimicron, as a publicly traded entity, is subject to stringent regulations designed to ensure fair and orderly markets. The correct approach involves Unimicron employees conducting market research through publicly available information, industry reports, and general economic trends. This method respects regulatory boundaries by not seeking or acting upon material non-public information. The regulatory justification lies in adhering to principles of market integrity and preventing unfair advantages. Ethically, it upholds transparency and fair competition. An incorrect approach of directly soliciting or receiving material non-public information from competitors, even under the guise of market research, constitutes a significant regulatory and ethical failure. This could lead to accusations of insider trading or market manipulation, violating laws designed to protect investors and market fairness. Another incorrect approach of disseminating speculative or unverified information obtained through questionable means, even if not strictly non-public, can also be problematic. This can distort market perceptions and lead to unfair trading practices, undermining market confidence. A third incorrect approach of using information obtained from a competitor's employee who may have breached their own company's confidentiality agreements, even if the information is not explicitly material non-public to Unimicron, still carries significant ethical risks and could inadvertently lead to the use of privileged information. Professionals at Unimicron should employ a decision-making framework that prioritizes compliance and ethical conduct. This involves a clear understanding of what constitutes material non-public information, a commitment to using only legitimate and publicly accessible sources for research, and a robust internal policy for handling sensitive information. When in doubt, seeking guidance from legal or compliance departments is paramount. The principle of when in doubt, do not should guide all market research activities. Question 20. Operational review demonstrates that Unimicron's internal audit team is planning to assess the effectiveness of its corporate compliance program. Which of the following approaches would best ensure a thorough and objective evaluation aligned with regulatory expectations? Option A. Conduct a risk-based audit, prioritizing areas with the highest potential for regulatory noncompliance and assessing the design and operating effectiveness of related controls. Option B. Rely primarily on self-assessment questionnaires completed by department heads to gauge compliance program strength. Option C. Focus the audit scope on operational areas that have historically experienced the fewest compliance incidents. Option D. Review historical compliance reports and documentation from the past 3 years to identify any recurring themes or issues. The correct answer is A. Conduct a risk-based audit, prioritizing areas with the highest potential for regulatory noncompliance, and assessing the design and operating effectiveness of related controls. Explanation. This scenario presents a professional challenge because Unimicron's internal audit function is tasked with evaluating the effectiveness of its compliance program, which directly impacts its adherence to regulatory requirements and its overall corporate integrity. The challenge lies in ensuring the audit is comprehensive, objective, and aligned with the specific regulatory framework governing Unimicron's operations, without introducing bias or overlooking critical areas. Careful judgment is required to select an audit approach that provides meaningful insights and actionable recommendations. The correct approach involves Unimicron's internal audit team conducting a risk-based assessment of its compliance program. This means prioritizing audit areas based on the likelihood and potential impact of noncompliance with relevant regulations. This approach is professionally sound because it ensures that limited audit resources are focused on the most critical risks, thereby maximizing the effectiveness of the audit in identifying and mitigating potential compliance failures. It aligns with best practices in internal auditing and regulatory expectations for robust compliance oversight, ensuring that Unimicron is proactively addressing its most significant regulatory obligations. An incorrect approach would be to conduct a purely retrospective review of past compliance activities without considering current or emerging risks. This fails to address the dynamic nature of regulatory environments and business operations, potentially leaving Unimicron exposed to new or evolving compliance issues. Another incorrect approach would be to rely solely on self-assessments provided by business units without independent verification. This introduces a significant risk of bias and a lack of objectivity, undermining the credibility of the compliance program evaluation and failing to meet the independent assurance expected of an internal audit function. A third incorrect approach would be to focus the audit on areas with the least perceived risk or complexity. This would lead to a superficial review that does not adequately test the effectiveness of controls in high-risk areas, thereby failing to provide assurance that Unimicron is meeting its most important regulatory obligations. Professionals should employ a decision-making framework that begins with understanding the specific regulatory landscape applicable to Unimicron. This involves identifying key compliance obligations and associated risks. Next, they should consider the objectives of the audit and the desired outcomes, which in this case is to assess the effectiveness of the compliance program. The framework then dictates evaluating different audit methodologies against these objectives and risks, prioritizing those that offer the greatest assurance and insight. Finally, the chosen approach should be documented and communicated, with a clear plan for execution and reporting.